All right, so let's get started then with your stocks and begin answering the queries sent in by our viewers. Mayuresh Joshi of Angel Broking joins in as our guest to answer all our stock queries. And we have Hemant Rustagi of Wiseinvest Advisors, who's a personal finance expert this afternoon. Gentlemen, good afternoon to both of you. Our first query is with us already. We have Karishma Bloch, who writes to us from Rajkot, and she says she wants to know if it's the right time to be investing in Tata Motors. She says that she already holds shares in Tata Steel. Okay, so Mayuresh, both Tata Steel as well as Tata Motors, I mean, this year, it's just not been a great year for the Tata stocks. So what's your recommendation? Given the kind of correction that these stocks have had, is it a good buying opportunity?
Afternoon, Sumera. Clearly, if I speak about Tata Motors first, the Chinese slowdown and the volume degrowth in the Chinese markets have impacted the earnings estimates, and a lot of analysts have actually cut down earnings estimates based on degrowth expected out of the Chinese market. However, I think at the current juncture, valuations are appearing extremely attractive, and clearly I think there are 2-3 positives coming out. I think the Chinese JV that Tata Motors has entered into, they will start reflecting better margins, and the operating leverage benefits should start coming through over the next few quarters. The new launches that Tata Motors has got, and though there is intense competition within the Chinese markets and you are looking at discounting happening, again I think the new launches will hold JLR numbers in good stead, specifically in relation to the Chinese markets, and the other markets have been holding up. Domestically, I think our own expectations in terms of MHCV volumes growing in excess of 20% with the kind of trend we are seeing would hold true with the capex recovery is on track. And clearly I think the stock is factoring in cut down in both JLR volumes, standalone PV volumes, MHCV volumes, again higher marketing expenses because of new launches, higher depreciation expenses because of new launches, but valuation simply too attractive. So yes, I think good time to enter Tata Motors in a systematic manner over the next few months. Tata Steel, problems of its own. I think commodity cycle has turned for the worse. Demand supply situation within the Chinese market and generally on the global scene doesn't look good. Last quarter's numbers, Tata Steel Europe's margins on an EBITDA to ton basis fell at $44. Southeast Asian markets are seeing the glut coming through in terms of Chinese exports, the Russian exports coming through. So realizations expected to remain soft. Even the high iron ore inventory of 1.5 MT would still play truant on the balance sheet of Tata Steel. So I think unless the investor has a very long-term view of more than 2 years, 3 years, I think it probably would not make sense, but the next 2 to 3 quarters will be extremely sluggish and soft for steel companies, including Tata Steel.
All right, Mayuresh, a fair point coming in there, but let's pull up SBI for you as we speak. The Bank Nifty has moved into the red, and in fact SBI, I think, has moved to the low point of the day, on the verge of moving towards the 250-odd mark. Tata Steel, the other stock that we're talking about, it's on the verge of moving into the red, and with SBI, Bank of Baroda as well as PNB, both of them should come up for you. They're some of the biggest losers in the last few minutes. Pull up HDIL as well. You'll see that stock, in fact, has seen some selling pressure from the mid-cap space. HDIL should be up for you on the screen as well. But let's get to our next query that we've received. I think we've received it from Sojanya, who writes to us from Hyderabad. She wants to invest 2 lakh rupees per annum for her 2 daughters. They're aged 4 and 7 years old. She wants to know which is a better option for her. She's named a particular scheme. It's a Sukanya Samriddhi scheme, recurring deposits as well as mutual funds. Her time horizon is a good 15 years. Hemant, what's it take? She's given you a scheme in there. She wants to invest for her 2 daughters. She's got a long-term time horizon. How could you help her out?
Well, I think as you rightly said, I think there are 2 important factors. One is the time horizon is 15 years, and the second is the goal for daughters' education, which we all know is a very important goal, and this is a goal which generally requires one to create a large corpus. So keeping these two factors in mind, my recommendation would be that she should opt for investing in a well-diversified equity fund. The other 2 options that she had mentioned, one is Sukanya Samriddhi and a recurring deposit. Yeah, advantage of investing in those is that you get fixed return, guaranteed return. But when you're investing for 15 years, your focus has to be investing in an option where you can beat inflation. I'm afraid with these 2 options, she's going to struggle to do that. So as I said, my recommendation is that she should go for a well-diversified equity fund. Ideally, one should be investing, through SIP. Since she's talked about investing a lump sum money, okay, even if she's investing for 15 years every year, lump sum also is all right, but if she can back it up with some kind of regular investment, she can do that. Other option for her is to look at an option like systematic transfer plan, where the lump sum money can be invested in ultra short-term fund and from there every month it can be moved into an equity fund. 2-3 funds I'm recommending for this kind of time horizon. One is Franklin India Prima Plus, Kotak Select Focus, and the third is Reliance Equity Opportunity, a good mix of large and mid cap, apt combination for a time horizon of 15 years.
All right, Hemant, thanks very much for that advice. Up next, we have a query coming in from Pramila Ratia, who calls in from Pune. Hi, Pramila, how can we help you?
Hi.
Hi, go ahead.
I have SR Oil 750 shares at the rate of ₹101.
Okay.
And my second question is, should I buy MRPL?
Okay, no, first tell me about SR Oil. Do you want to, do you need the money? Are you okay with holding it? What kind of advice are you looking for?
No, we are okay with that share. I don't want to sell, but I want to consult.
Okay, you want to know basically how much higher it can head. Okay, and what about MRPL? What's your question?
I want to buy MRPL. Should I buy now or?
Okay.
मैं रुक सकती?
ठीक है. Okay, Mayuresh, two questions from her end. One is SR Oil, one is MRPL. So first on SR Oil, the stock has had a great year. It's had a great month as well. She's making nearly 70,000 in profit over there. Should she remain invested, book partial profits? And would MRPL also present a good buying opportunity for a retail investor?
So clearly, somewhere on the SR Oil part, as a disclaimer, it's not under coverage, but as I see the stock and I track it, high debt levels clearly causing a dent in terms of how their cash flows are panning out. Gross debt close to 25,500 crores. If you look at the net debt, close to 20 to 23,500 crores. And clearly, I think the kind of valuations it's currently deriving at, I think it's factoring in a lot more. So what probably happens with a stake sale which is being circulated in media, again, and that's very speculative. But clearly, I think the GRMs is something that has held up for SR Oil. But for it to return into profitability, a GRM in excess of $10 is something that the market analysts are looking at. Even if it sustains between a 9.5 mark, it will not be enough to cover the kind of interest payments that SR Oil makes. So I think high interest payments, high levels of debt on the books, valuations appearing rich. So I think she needs to take a call from a financial advisor based on these fact points. When it comes to MRPL, I think our take is that the upstream companies, and specifically the larger ones, something like a Reliance Industries, which came out with a good set of numbers, is something we'd prefer and continue to like on declines. Clearly, I think the kind of expansions that Reliance is making on its core business on petchem and refining, it should hold Reliance's numbers up FY17 onwards. So I think over the next 4 to 6 quarters, you'll see substantial improvement in earnings coming through for Reliance. So this is something that I like. I think MRPL at this point of time, I'll clearly stay away from it.
All right, then stay away from MRPL. It's a call that's coming in. But let's pull up another stock. UPL really caught my eye because the stock came out with a set of numbers. There was a mixed view. There's a lot of trading activity that took place. UPL is the stock we're talking about. The stock quickly corrected from around that 530 all the way to around 520. Or there was some talk that, in fact, maybe those valuations are becoming expensive currently. But pull up the stock, you'll see that it's fighting back in the last few minutes. Currently, it's recovered all that lost ground. Stock, in fact, remember, year to date or in the last 1 year, in fact, from today, the stock is higher by close to around 75 to 80%. So it's been a big outperformer. And in fact, today it came out with 7 numbers, took a bit of a downtick, recovered in the last 10 minutes. Time to slip in a short break. Come back. We'll answer all your queries. Welcome back to your stocks on Cnbc TV. And just pull up the Nifty. It's done a bit of a jig in the last few minutes. Currently, in fact, it's moved to the high point of the day. Glenmark as well as Auto Pharma from the broader market, they are staging a bit of a fight back in the last few minutes as well. But let's get to our next query. We have Dhananjay Dev, who writes to us from Pune. He has 25 shares of Yes Bank at a price of around 350 rupees. He wants to know whether or not he should hold on or he should sell the stock. Mayuresh, what's your take on Yes Bank? He's making big money, but should he hang on to it? You saw the numbers as well. He's got only around 25 shares, so you believe he should stick on?
Oh yes, Nigel, I think he should. The numbers were quite decent in our opinion. The NI growth in fact surpassed our own expectations. The NIMs came on the higher end of the band at 3.3%. And again, I think if the management says true, and again, I think if the retail advances grow and the yield on those advances grow, the NIM should expand by another 10 to 15 pips over the next few quarters. Having said that, asset quality more or less has been maintained by the bank, and the kind of provisioning that it does in terms of PCR at 72% 8% is quite substantial. So we built in credit costs in excess of 77 pips for the next few quarters, and that will probably entail that whatever softness happens in asset quality is more or less covered. So in our opinion, I think at the current valuations, the stock is still looking attractive. So yes, I think hold on. Our own target over the next 12 months stands at 993.
All right, up next we have Paul Devasi, who called in from Mumbai. Hi, Paul.
Hello. Yeah, tell me.
Hi, how can we help you? What's your question?
I had purchased 15 gold ETF of HDFC around April 2013.
Okay.
So I just want to know whether I should hold for a long term or sell it off.
Okay, and what part of your portfolio is this gold ETF? I mean, is it a significant portion amongst your investments?
No, it is a small portion.
It's a small portion, okay. Hemant, Paul has got a small allocation to gold, but like the rest of us who've invested in gold perhaps earlier, he's making a bit of a loss there. But given that it's not huge, given the other investments that he has, should he just remain invested?
Well, Swara, I think irrespective of the fact whether it's a small holding or a large holding, I think to make a decision whether to hold on to this investment or not at this point in time, I think he needs to revisit the reason for which it was invested. On the face of it, it appears like it was an attempt to, take benefit of the rising prices at that point of time. So a lot of investors were investing in gold ETF and gold savings fund. If that indeed was the reason, then I think my recommendation would be, and if he can invest, still hold in for long term, which he said he can. Because when you are holding a small quantity, it's neither giving you diversification nor giving you the benefit of, asset allocation. So it doesn't really make sense to continue with that. So my recommendation would be, since he's holding, ETF of HDFC, he can look at another fund of equity fund. In fact, provided he can keep it for longer term, he can look at HDFC's mid-cap opportunity fund. I think that would be a better option rather than holding on to the gold at this point of time.
All right, then, that's some valid advice coming in, but we're talking about Glenmark Pharma. In fact, there's a bit of a clarification that's coming out. Remember, Credit Suisse wasn't too happy this morning, and in fact, they expected downside for this particular counter. They are low in comparison to estimates, but now, in fact, the company says that the U.S. court decision has no material impact on the company, and that's why, in fact, we have seen that particular stock was recovering just in the last few minutes on the back of that clarification that's come in from the management, and it hit a low today of sub that 930 rupees. I think the street was sensing there could be some kind of clarification coming in. Stock has recovered, moving higher, but from the frontliners as well, take a look at Lupin. It's recovered close around 1% in the last 20 minutes. I think that stock is moving quite well, and Yes Bank on the back of its numbers has moved to the high point of the day. Stock sitting at around that 820 mark. But let's get to our next query. We have Rahul Kumar who calls us, and he has a query on JSW Steel that will be coming out with a set of numbers. Hi, Rahul.
Hello.
Hi, Rahul. How can we help you?
Good afternoon, sir.
Good afternoon.
I'm having 800 shares of JSW Steel.
Okay.
At the rate of 102.
Okay.
So I wanted to know, shall I book profits in it, and which stock can I switch over to?
All right. You bought it very long time ago. I think 15.
It was around 20 years back, 15 to 20 years back.
All right. So you're making good money. You're not being bothered by this price correction that we're seeing from around 1,300 to around 800. You're still making some money. But let's get an expert opinion coming in there. Mayuresh, lucky investor.
Oh, absolutely, and considering his buying price, he should hold on to JSW Steel, though I think we are going through a commodity down cycle, and clearly that's getting reflected in terms of how the realizations are panning out, lower volume growth happening for most steel companies, JSW Steel not excluded. So again, I think the numbers are not going to be encouraging. As I said, for Tata Steel, even for JSW Steel, the high iron ore cost inventory is still going to play truant on the balance sheet for the next couple of quarters. It's only second half of this financial year that you might see some amount of recovery, and the fall in prices might actually start getting reflected in a better way onto the EBITDA margins of these companies. However, I think with the kind of capex plans that have got 9,000 odd crores to have capacity expansion in Vijayanagar, and again I think the iron ore concerns in terms of sourcing for its Salem and Dolvi unit remains an overhang. And the debt on books, I think the debt on books is quite high for JSW Steel, so how they do the interest servicing is also going to be interesting. So I think if we can ride this bad wave and hold on, because he's held on to 15 years on the stock, if he can hold on for another 2 to 3 years, I think he should hold on to the stock because of the sheer buying price that he's got into.
All right, on that note, it's time for us to take a very quick break. We'll come back in a bit. Our two experts are with us, and we'll continue answering all your queries once we're back. Stay tuned.
But let's get back to answering your queries. We have Mahesh, who calls us from New Delhi. He has investments in Allahabad Bank. Hi, Mahesh.
Hello.
Hi, Mahesh.
Hello. Good afternoon, sir.
Good afternoon, Mahesh जी. आपका सवाल क्या है?
मेरा सवाल है, मैंने इलाहाबाद बैंक 2 साल से होल्ड करके रखे हुए हैं जी.
ओके.
मुझे क्या करना चाहिए इस समय कि मैं अपना पैसा रिकवर कर सकूं किस तरीके?
All right, Mayuresh is holding it for 2 years, but we know what an underperformer Allahabad Bank has been. How could you help him out? What's the exit level?
So Nigel, I'll try and answer the question in Hindi for him. तो clearly Allahabad Bank के जैसे numbers हमने देखे हैं और generally PSU space के अगर हम numbers देखें asset quality को लेके तो asset quality की question marks अभी भी system में बरकरार है. There is still stress related to restructured assets, fresh slippages कितनी होंगी इसकी पता नहीं चल रहा है. दूसरी बात I think banks consciously credit growth को एक slowdown का महसूस कर रहे हैं जिसके वजह से I think इनकी जो NIMs है उस पर फर्क पड़ता है और capital adequacy is also a big issue. तो मेरे हिसाब से I think आपको काफी समय देना पड़ेगा अगर आपको रिकवर करना है तो. बट एट दिस पॉइंट ऑफ टाइम जैसे मैं पहले भी कह रहा था आई थिंक प्राइवेट स्पेस इज समथिंग दैट विल स्टिल लाइक. तो येस बैंक के जैसे नतीजे आए थे काफी एनकरेजिंग थे. या इवन समथिंग लाइक एन एक्सिस बैंक विच हैज गिवन अ स्टेबल सेट ऑफ नंबर्स जहां पे हमारे अगले 15 महीनों की टारगेट प्राइस 716 रुपए है.
All right, that's the word on Allahabad Bank. And finally, we have 28-year-old Ronak Singh writing to us from Lucknow. So he says he wants to invest 5,000 rupees a month in mutual funds. He wants some advice on where to put this money. He's a first-time investor and he hasn't indicated his time horizon, but I'm guessing that given how young he is, which is under 30, he would be a long-term investor. Hemant, what are the funds that you want to recommend?
Well, Sumera, first thing I would say that it's a good decision to start investing in mutual funds because if you were to compare mutual fund with traditional options, mutual fund definitely are a better option, in terms of potential of return, the variety of funds that they offer, tax efficiency, and the fact that they are diversified by nature, which actually makes them suitable even for the first-time investor. So, like I said, I think it's a good decision to start investing in mutual funds. Again, like you, I'm assuming that he's young and he intends to invest for the long term. So my recommendation would be to invest in well-diversified equity fund through SIP. Yes, of course, there are going to be attendant risk of investing in equity, but the fact that you're investing every month, you kind of benefit from averaging. So 2 funds I'm recommending for him. One is BNP Equity, which is predominantly a large cap fund. He can invest 3,000 rupees in that. The other fund is SBI Magnum Global, which invests predominantly in mid cap and some part in large cap, where he can invest 2,000 rupees.
All right, Mayuresh, Hemant, thanks very much for joining in to advise our viewers. We'll wrap up on your stocks. Do stay tuned for closing.